It's the end of the trading week, which of course means it's time for our weekly wrap-up. I'm joined by Jasper Lawler, market analyst with CMC Markets, to catch up on the biggest market movers this week. So Jasper, everyone had their eyes on today's US August payrolls, in at 173,000, much lower than forecasted at 220,000 jobs for August. Is the data as disappointing as it seems?
Well, the initial reaction was for a lower dollar, and equity markets briefly spiked because, on the face of it, that is weak data. But some of the internals of it actually made it a stronger report than you'd first imagine. It was the increase to wage growth above expectations, and a slight drop in the unemployment rate meant that actually those initial moves in the market got reversed, and it was generally seen as a fairly positive report that probably doesn't take away from the Federal Reserve's ability to hike rates in September.
Now, you mentioned the Fed rate hike in September. As this is the last NFP release before that meeting, what kind of effect do you think this number will have on the Fed rate decision?
Yeah, I think on balance, it probably supports it. We saw a slight move higher in Fed fund futures, suggesting that September was marginally more likely. The market still thinks that a December or even January next year rate hike is more likely, but most economists still have September down as a rate hike. I personally tend to think that the Fed is already comfortable with the state of growth in the US labour market, and this report probably doesn't really change things either upwardly or downwardly. It's more inflation or the lack thereof that's their big worry, and more recently the volatility sparked out of China, which I think are probably two reasons to suggest they're just going to err on the side of caution and at least not hike in September, but in maybe December or January next year.
Moving away from the US, of course, the G20 meets in Turkey with emerging market slowdown and the prospect of higher US interest rates likely on the agenda. What do you think is likely to come from these talks?
Well, we had a slight hint from ECB President Mario Draghi in his press conference yesterday that one of the big topics would be exactly the intention of Chinese authorities when they did devalue the yuan earlier in August. And so quite how much of that information goes public is unknown, but I think that will be one of the large discussions just to determine whether this is this Chinese beginning a longer run path of devaluing their currency, which will really add pain to emerging markets because they'll be, their currencies will have to drop just to match the competitiveness of China when its currency drops. But as far as other issues, I think Greece is slightly off the table for now. That seems to be ticking along okay, and I think probably we'll just look for those details from China.
Well, that wraps up this trading week for now. Have a great weekend and make sure you're clicking back on Monday. Bye for now.